Great. Well, that's taken care of that.
Just take it with a grain of salt.
Now off we go. Part 2.
Cool. Thank you everyone for staying back. Most of you are. So that's good. Thank you. Okay, so I'll not make it very go home as well. So we will now work on some of the solutions. So we understood what was the problem, or what is the severity of the problem of cash flow, and what are the different aspects, how you can monitor that cash flow, or how you can forecast that cash flow, how much you need. Now we come back to the solution part, and when I looked at the solution, so I thought that maybe that's the most important one. So I put the first slide as the most important one, and where you can get most of the summary. So the first thing you need to address in your solution to get the in your cash flow problem, or how you can manage your cash, or how you can manage your business, the most important and the most comprehensive solution is setting up your detailed business plan. When we are starting a small business, we start due to many factors. Like one of them could be a passion, one of them could be whatever be the reason. But the thing that we just get started, and that should not be the case. When you start a business, or whenever you are expanding a business, you should have a detailed business plan. And then the cash management. But here I just summarize the most important parts and most important things in your business plan. Is you got to know what you are going to do and what you are not going to do. You cannot do everything. You cannot sell everything. You cannot buy everything. You cannot do all the services. So you need to have the clear demarcation of what you are going to do. What is your strength? What is your weakness? What are your opportunities? And what are your threats? So that's the SWOT analysis. So you need to understand which areas you are going to operate, and which are the things that you are going to do. And then you need to have a sales plan. You need to have a marketing plan. You need to understand who are you going to sell to, whether the product is sellable or not, whether there is a demand for that product or service, and if there is a demand, how much you can charge to them. It's good that there are a lot of things that may be in high demand, but people may not be ready to pay the price that it should be. They are happy to get the product, they need that product, but the problem is you have to bear the cost. And for that cost, on top of that, you have to put your profit margin, and then comes the sales price. And they should be ready to pay that sales price. So that should be clear on your business plan. Unless you have that plan, you do not have the forecasting of the cash. You cannot just estimate only one side, which is your cost. You need to plan for the sales as well. All the plan should be in a page. You should be able to summarize what is your vision, what is your objectives or mission, why you are doing this business, and what are your goals. Like, in terms of 3 years, where do you want to achieve? What do you want to achieve? Where do you want to go in 3 years? Where do you want to go in 5 years? And those particular factors will guide you as to what you are going to do, what are your products and services, and how you are going to do it. Similarly, you need to know the target markets, which area of the market you are going to address, which is your customer segment. And as part of this whole exercise of creating a detailed business plan will come out that how much money you need as your working capital. Working capital meaning like what to meet your day-to-day expenses. And that's how you are going to get that money. Whether you are taking money out of your own mortgage, that is the equity from your friends and family, or borrowing from a bank, what you are going to do. So all that will come out. I will look into all those options. What are the different options? But all that is the amount that you are looking for in order to survive, or even in order to sustain your dream of doing business for the next 3 years or 5 years, because that's how long it might take to know the outcome of what you are doing. Whether you are successful in your business or not, it will come out after 3 years. So till that time you need to survive. Okay, so if you need to understand in detail of that business plan, I have got a half a day workshop for that. Okay, now one of the important thing is the receivables. Like once you start doing the business, you have to collect the money from your customer. It is for a small business, it's very good and fulfilling to give services to the clients. If it is a service based, if it's a product based, yes, sell the products. But you need to get the money back as well from need to get paid from your customers, and that's the most important aspect of managing your cash flow. Often we are doing a lot of sales, we are providing a lot of services, we are working hard, but probably we are not getting paid on time. So certain cases it might be that you are not even doing the invoicing on time. Job in terms of a quote that this is how much it will cost. I'm doing the job, but as soon as I finish, if you are sending after 2 days or after a week, the customer might think that okay, he probably doesn't need that much the funds that so urgently, so maybe I'll take it. Very important. And also what I, from personal experience, because I'm in a service-based business as an accountant, giving a quote is very important. Even if you start the job, before you start the job, giving a quote is very important. It gives you clarity to the client, to the customer, as well as it creates that immediate the trigger that as soon as the job is finished, the invoice will be going out and it has to be paid. And of course, the softwares like Xero and QuickBooks, they are all very good. Xero, particularly, I like certain features. You can also send reminders or automatic reminders. You don't need to, wait for manual processing or manual follow-up. Automatically the system will send out a reminder. You can set up the days after 7 days, after 15 days, whatever you want. Whether do you have a credit policy or not? Nowadays, most of the businesses can say that we don't have a credit policy. You just if you need time to pay your invoices, just use credit card. Or sometimes you can also make an arrangement with your what they call it buy now pay later kind of companies who help you get the payments in installments. So you can make an arrangement with those companies, and if a client wants to pay in multiple installments, you can offer that service to them. Of course, online payment options, so you can pay by credit card. You don't need to wait for the cash or all that. So this is how you try to manage your receivables. And of course, you can incentivize some people if they are paying. You can say before the job is done as an advance payment. You can give some discounts to them, or maybe put some extra to them. If you are selling a product or something, you can give something extra to them when they make the prompt payment. So that's how you are helping yourself. You are managing your cash flow. Just like you might have seen a lot of software companies nowadays. It has become a common practice that if you take the subscription on a monthly basis, probably it will cost you $50 a month. But when you do it annual basis, they will charge you only $400. Why they are doing this is just to manage their cash flow. Even big companies like billion-dollar companies are doing that. So we need to take care of ourselves, of course, to how to manage that cash flow. Okay, then on coming to the other side is paying our bills. How we can manage paying our bills. Of course, we need to create budgets. Even before we start the work or in our day-to-day process, we need to make budgets, and we need to understand when something is payable so that we are prepared. We do not spend on something early without which is not a priority. So we need to understand what is our priority and what needs to be paid out first. So based on that, you need to make a plan, and then you follow that plan throughout the month. Sometimes we can negotiate the terms. Yes, if we are not in a position to pay immediately, then we can negotiate the terms. whether we can pay at a certain date, or maybe after certain months or whatever, and then we can work out a solution. On the other hand, if you have some extra cash at certain point of time, you can take advantage of that as well. You say to your vendor that I will pay in advance, or I am ready to pay the full amount. Can you give me 5% discount? Can you give me 10% discount? So you can utilize that position as well. Of course, you plan ahead, especially in terms of what I would like to highlight is the payments to ATU. That's very important. When we get the money from the customer, we don't sometimes realize that the entire amount is not ours. 10% is GST. I have to pay 10% GST, and we forget about that. And at the end of the quarter, we have to pay that, and that feels like a burden. It's just because we have not planned it properly. So that's what I'll highlight again in the maintaining a cash reserve. So in terms of when you are getting the money or when you have the funds, if you can create some reserves for contingencies, reserves for quarterly GST or other liabilities, superannuation, or maybe even just additional payment to the staff, something goes wrong. And sometimes, if there is a damage in your equipments or tools, all of a sudden you have to buy a new laptop, all of a sudden you have to buy another camera or something like that. You don't have any plans for that, even though you are buying in credit card or something. But still, if you don't have a plan, then it will, derail your plans, and it will create unnecessary pressure in your cash flow. Okay, now so what are the solution in terms of if you need more funds, how you can get that? We have got a representative from Service New South Wales for Business, so he can probably guide you more. What are the government providing you different grants and rebates, and what are different schemes? Maybe you can catch up with him after this. But there are a lot of ways you can take government grants, and there are programs. One of the things just came to my mind, and it's related to technology, so I thought that I would share that. Nowadays, we are paying a lot of money or a lot of amount to the online subscriptions to a software, to a particular technology. For example, let's say Office 365, or maybe Zero subscription, AWS, or maybe some other Adobe technology, anything like that. There are a lot of things. Now there is a particular kind of additional rebate the federal government has announced. It was announced by the Liberal government actually before the election, but now it has become a law. So whatever payments you are making to any technology related product or service, you can claim additional 20% as an expense. So if you are paying $100 a month, you can claim as an expense $120. So that is something which is easily available to you. It is already there. You are already making the payments. It is just that you have to identify them in a way, and then you have to claim it in your tax return. So when you do your business tax return, at that time you have to claim that amount. There are so many other things like that, if there is something like a research and development expense. So sometimes we create new processes, sometimes we use new technology within our business. We not really inventing something, but we made a workaround to work something new. Earlier the work was being done by 5 steps, now we have reduced it to 3 steps, and we deployed our own solution for that. Maybe own tools, own machinery, own software, something like that. It might be eligible for a research and development rebate or grant. You never know. So you need to just look out for that. You need to seek professional help who are working in this area, and you can ask them whether, am I eligible, just to get an assessment done. And it can be, big amount. Like if you are spending a lot of amount in your website and, softwares, it can be a big amount, $50,000, $100,000, who knows. So just look out for all the government grants and, rebates. Okay, then of course you can take loan from your equity, like if you have got a house and you have got equity built up in that, you can always take a home loan and take money from that. Of course, there's no surprised with that. But one of the things that is most recently has happened over the last couple of years, I would say, is that financing based on accounting. How you manage your accounting. That's very important nowadays for the banks. And earlier they did not have a solution. The financial institutions always wanted to know how much you are compliant with normal business practices or the government rules, or maybe you can say your prudent business management policy, or you can say processes. Now they have got the solution for that, and the solution is your accounting software. So if you are using Xero, there are companies or there are lenders who are happy to lend you money based on your accounting system. How you are managing your accounting. You never know. They will not say exactly that what is the criteria, because then you may, deliberately look it good. They will not tell you exactly what it is, whether it's based on your amount of invoices, whether it's based on your time taken to pay your suppliers, or whether it's based on your customer repayments. They will not say that. But if you give them access to your Xero software, they will assess it and they will, give you money. You never know. So it could be available. So if you are in need of funds in terms of cash flow, you can, avail this option. Of course, you have to pay the interest, but there are options available. Similarly, there are options based on based on BAS. GST return, like how much sales you are quoting in your BAS, how much is your purchases over there, how much money you are paying to your employees. Based on that, also there are companies or non-bank lenders who are ready to advance you money. Of course, invoice financing is a very age-old thing. That's just I wanted to put it up. There are a lot of companies. Lumo financing. There are many more like that. They use the accounting software data, but they simply they simply finance based on your invoices. Similarly, on the other side, based on your suppliers' payment, how much you are paying, if there are certain big invoices, or there may be sometimes invoices of a regular nature, but it is directly related to your receivables, they can give you finance based on your invoice. Like it's just like a buy now pay later thing. It's like an installment payment system. They just call it in a different way, but they can help you with that. So it is in addition to what you are getting from your bank and other arrangements like credit card and all that. So continuing with that, of course, you can get the bank line of credit. I don't know what is your experience with that. Sometimes it's good, sometimes it's bad. It depends, like, how is your relationship with the banker. I've got a good relationship with the Cumberland Bank and the NZ Bank, but that's a different thing. Sometimes it can be difficult as well, but it's an option. Then, of course, equipment financing. If you're looking to get finance from a particular tool or particular equipment, like say, if you deal with machineries, if you are a printer, then you need printing equipments. If you are a IT related provider, so there are a lot of servers and other equipments you need to buy. There can be financing based on the equipments. Then there are company credit cards, corporate credit cards, even Amaze. You might look into that option as well. Well, everything has got a cost. Everything has got an interest. So I'll come to that, what in the next slide about that. Then there are vehicle financing. Of course, there can be two ways. You can get the vehicle on your own from your personal. The rate of interest may be lower in that case, but you can get the vehicle in the name of the company so that you can claim depreciation as well, and you can get other benefits. It might be easier to claim the expenses. It might be, of course, there can be some fringe benefit, tax liabilities or scenarios. But again, you get the money when you need it. So that could be an option as well. There are certain advances based on projects as well. There are lenders who are happy to give you money unsecured, not even secured, unsecured advances based on your project, what you are trying to do. If you are trying to develop a project, develop a website, develop a portal, for your customers or for anyone in general, the public, mobile app or something like that, you can always reach out to them and get those finances. Finally, there are ways you can manage or you can say structure your business. You can structure your operations in certain ways, which might be beneficial, or which may lead to deferment of the tax. You don't pay the tax now, you pay it in the future. It's not like that you are paying the less tax. Of course, everyone wants to have that, but of course what we need to pay our liabilities, whatever it is. But there are ways you can structure your business in such a way that you pay tax at a later stage when you have a probably better financial position. So in the meantime, you can use that money for your business. So you can create those kind of tax strategies. Of course, you need to consult your accountant or tax advisor for that. Okay, so if you are a startup, so by startup I mean who are into a particular scale, like say they have invested $1 million or maybe $5 million, or maybe working on a particular technology or a particular product to launch. There are a lot of options nowadays for the startups. So the first option that many of us should look into in Australian market is the franchise model. Is your business such that you can give franchise rights to others? Is it possible to do that? Are you looking to expand your business in that format? Then it could be a very good option in terms of raising cash, because then you can sell your license, set up your license fee with $100,000, $200,000 for each of these license holders, and it will not only increase your sales but also reduce your personal cash burden, and it will give some license money to you. So that's definitely an option you can look into. Then there are certain crowdfunding websites. So after this meeting, if you want, you can send me an email. I can tell you what are those websites or those funds. If you don't have the idea, there are a lot of companies who are actually doing that. So if you have got a proposition, but you are not in a position to list yourself in the ASX as a listed company, but you want to get money somehow by liquidating some portion of your equity. So you are ready to sacrifice, let's say 20% or 30% of your equity in your business shareholding, and in return you are, let's say, seeking $2 million. So that is possible now with the crowdfunding. Then there are, of course, there are venture capital funds who can give you the seed funding, who can give you initial amount to do some research and investments, and you can use that. There are some other platforms which do, again, peer-to-peer lending, which just work like a bank, but not exactly a bank. They are non-banking, web-based platforms. So again, the rate of interest may be a little bit higher, maybe let's say 15% or 14%, but there are options available. You need to do everything online. Like you create a proposal, you upload it in that particular portal, and then there will be people who are ready to invest the money, and they can assess your proposal and they can lend you the money. So it becomes a kind of a fixed deposit for them, 3 years, 4 years, 5 years, and for you it becomes a long-term loan. So that's an option as well. And of course, the angel investors and venture capitalists, if you have got a niche idea, if you've got some different proposition, something based on technology, something based on crypto, whatever, So as long as it is something exciting, probably they would be interested to invest in there. Okay, finally, so we come to the end. It's all good that you get a lot of sources of getting funds, so you can borrow as much as you need, but there are certain things we should not be doing, which is overdoing the borrowing. We should not overextend the credit. We need to understand what is the ideal leverage ratio that you want to operate with, and that's where we go back to the first slide. You need to understand your balance sheet. You need to understand your leverage ratios. what is the ideal or the maximum permissible leverage ratio that you need to operate within, how much you can sustain. It's good that you have got so many sources. You can take credit card, you can take mortgage loan and all that, but you should not overextend that. Then of course you should not ignore small expenses. Sometimes it is good to be little bit thrifty, like saving where you can, not spending unnecessarily where you can avoid that. So it's always good to save some money here and there, and that pays off in the long run. Sorry for that. I don't know why it happens, but sometimes the presentation gets distorted. Third point is, don't neglect the tax planning. Tax planning is the most important strategy or the approach you can take, because it's not just for 1 year. It's not just for when you are small. If you do your tax planning properly, then it will help when you scale up as well. When your operations go big, it will help you in that as well. And that is why you need to start early. If you want some long-term vision, talk to your accountant, talk to your tax advisor, how you can structure your business in such a way that in the future also you get asset protection, you get some tax benefits, and it is easier to manage the compliances. Finally, the last point in this slide is, don't resist change. Look for alternatives. Always be open-minded. What are my options? What are the things I can do in order to manage the cash flow? I'll give you an example to finish with. Many people don't know about it. It's called Small Business Restructure, SBR. It's a federal government initiative, and it is supported by the state governments as well. Not many people are aware of it. Sometimes we have a problem of cash flow. We are in dire need of funds. We are in such a situation that we cannot cope up with that. And the next option is going into liquidation, being insolvent, declaring ourselves bankrupt. But there is a process, or there is a step before that as well. We cannot do that every year. You cannot do that every second year or 2-3 years. But if you are in a position where you are thinking that I have to close down the business, I am in a status where I am going to declare myself as bankrupt, where I am not able to sustain my liabilities, I am not able to pay my employees, I am not able to pay my suppliers. There is a process which is called SBR, Small Business Restructure, and it's a very, very powerful tool. But of course, you cannot use it every day. So, in case you need to if you are in such a situation, please talk to someone who is a specialist in that area, and how he can help you. You can do your own search, Google search as well. But of course, it's a complicated process, but it's a solution. It's a very, very good solution for small businesses. That's about it. Here are my contact details once again. If you need any help with accounting or financing, cash flow management, if you want to understand more about this topic, or do a workshop in your own business as well, just let me know. My name is Shyam, and here's my contact details. Thank you. Thanks a lot, Brian. Thanks a lot, Emmanuel.
Thanks. Thank you so much, Shyam. As you know, with our chamber, we are a green chamber. So Shyam, stay right here, because there is a presentation. That's it. Tradition must be kept.
Thank you.
Come guys, come to the middle.
Okay. Yes.
That's it.
Thank you. Much appreciated.
That's fantastic. And Shyam, you'll be around if people want to contact you, right?
Sure.
That's excellent. All right, time for the draw. Where's that?